Good morning and welcome to another week. Wednesday, I'll just move my microphone slightly away so it's not interfering. I will just remind people that I am watching YouTube and the Discord channel so that I can see both. Good morning and welcome to another week. Wednesday, I'll just mute the YouTube so we don't get an echo there. Right, okay, on to the disclaimer. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And then, as always, a little snapshot on me. So I am very much focused on intraday trading. I trade both discretionary and algorithmic. Okay, let us get that one off and put the screens up just so that we have those in the background. Okay, we have a few people on YouTube. Feel free to say hi and feel free to ask questions. I can see the YouTube chat. Okay. Let us click on the where is it? There. Sorry, I should just have a look at that. Okay. By the way, this is my Obsidian install where I keep my journals, and I'm happy to go through the concept of timestamp journaling in a future session. I think I've mentioned it a couple of times, but I'm happy to talk about the whole process of journaling in a little bit more detail. Anyway, we are talking about liquidity today, so we will get to that in a little bit. But sorry, that's my microphone again. But before that, I think I'll just do a recap of where we are generally. So put that back up. Let us move on to the slideshow. Okay. All right. I like doing this at the beginning of the webinar, so it's just really a recap from a high-level perspective of where we are. And to recap, we were in an uptrend which became more aggressive, and this is shown by the two trend lines on this picture. This is the ES. There's no price there because I don't tend to put price on this chart just for space-saving purposes. The shallower trend line was the older trend line. The steeper one was the more aggressive, more recent one. We've now broken clearly through both of those trend lines, so the uptrend that was a multi-month uptrend in the ES is not currently in play, and so we are in something else. We're in a transition phase, or maybe we're in a downtrend. Let us move on to the next slide, which I think is the NQ. Same position really. You can see both those trend lines clearly broken, and we have not gone back yet to test the upper trend, the longer term trend line. What else can we do? I've actually got this slide here for a couple of purposes, but the first purpose I will use today is to talk about value and where we are. So this again is just a high level view of where we are. As always, the shaded grey profiles are the evening or the ETH session, and the non-shaded profiles are the RTH ones. I don't tend to show the previous ETH sessions after those sessions have gone. Anyway, we are in this ETH session in the middle of value, or we're just traversing value on ES, and if we move across to NQ, it was the same view again. Quite a large value area, and we'll have a look at the 3-minute chart and see where we are in relation to that. So the value went all the way down to 14,940, and we've basically, if you look at, if I get rid of this and we go back to the TradingView 3-minute chart on the bottom right, you can see we've gone all the way down to the bottom of yesterday's value, and we've just tagged settlement, which is this magenta or purple line at the bottom. And the ES hasn't quite got to settlement, which is just down below at 4399.25. So in other words, all we're doing is playing inside yesterday's range, or more specifically inside yesterday's value. Okay, And if we quickly have a look at Bookmap, double check this, and see where liquidity is, we had that massive band, or quite a large band of liquidity up above at the 4425 level, and we're approaching several smaller bands of liquidity at the moment, which it is likely to get to, and they may have a little bounce. So we're slowly going down to that liquidity down at 4402. Nothing travels in a straight line, so we'll see how we're going. I am not putting up the economic calendar for this ETH session, or for the RTH session. There's nothing happening in ETH, nothing happening before 9:30 Eastern, so for the purposes of my 1 hour, we're not expecting any major news. So if we suddenly get a huge amount of volatility, that's something new that's coming in. But there's nothing currently planned by way of economic releases. And looking across at the NQ liquidity, there's some liquidity up above. Again, we tend to ignore the round number liquidity at 15,000, but we've got some
NQ by 53 stop.
We are going towards that. That liquidity up at 96 just gone. Decent sized trade there, 165 just taking out this bit of liquidity, and there's not much else by the way of resting there. There's some new liquidity that's come in, but that's only just come in. Yeah, just come in the last few minutes, so we can ignore that unless that sticks around until the RTH open. We're going to leave that on ES, and we're going to go back to the agenda. Okay. Agenda. Okay. All right. Liquidity. So I've got some bullet points here. I've got a typo in that one as well. Just correct that. And we are going to talk about it generally, also in terms of technical analysis, which I don't tend to do much of. And then we're going to go into the specifics inside Bookmap of how we might see it and how we might use it. Okay. Right. So if we tackle the first bullet point of what on earth is liquidity here. Okay. And if we go back to Bookmap, liquidity, in my mind, or again, this is a personal view, so take everything that I say with a pinch of salt, and please do your own factual research, etc. And any of the ideas that I come up with, and hopefully I will come up with a couple of ideas in this session, just take those as starting points to do your own research and investigations. Just checking Discord, yeah, okay. Just checking to make sure there is no additional question. No. Okay. So what do I mean by way of liquidity? I mean, I'm talking about the order book, the resting order book, which is shown in Bookmap here in this column, the COB or current order book. And I'm talking about a relatively large amount of orders sitting there as opposed to other price levels. So in this instance, relative, 177 down at 4402, that might be minuscule or relatively small in RTH later today, but for this purpose, if we zoom back out and have a look at the last couple of hours, that is relatively large compared to the liquidity that has been there. In fact, if we just go and look at the liquidity shaded up above, that's 106, and this is 180 odd. And you've got a band of liquidity there. So all I mean from a pure sentence perspective, as in what is liquidity, it means that there are more orders sitting in the book in this price zone. So ordinarily we are not talking about one price level, we're talking about a couple of price levels, although it might be an individual price level. That resting liquidity does not have to be filled. It is just an advert or a flag by a larger participant, somebody sitting in the book saying, hey, I have this liquidity down here, I might like to transact there. What you'll hear, or what you may hear when people are trying to knock Bookmap, is that liquidity is purely advertising and that it is not the same, or it does not have the same strength as transacted volume. And my perspective on that is that liquidity is market generated information. You can go back to the webinar I gave last week on that topic. It is something that is being put out there. it is a numeric value rather than something artistic. I'm not talking about the actual heat map shading. I'm talking about the volume in or the volume of orders in the order book, and it is something that can potentially be used in your trading. The theory of why it goes hand in hand with supply and demand, or Wyckoff supply and demand as I've been talking about it, or volume profile, is that markets most often or often seek liquidity in order to transact. So that goes hand in hand with the auction theory concept of markets exploring price in a certain direction because they believe that liquidity will continue to be provided in that direction. In other words, if the market is seeking prices upward, i.e. is an uptrend, it will continue going in an uptrend as long as it believes it can do business higher and higher. And in order to do that business, you need liquidity. And the clearest way to see the liquidity is if they provide more orders in the order book at those price levels above. And that's one of the reasons why in ETH we're often looking at resting liquidity as some information as to where direction may be headed. It may not be right now, but it may be a little bit later, or it may be in the RTH session. But that's one of the reasons why we look at the resting liquidity, because price will often move towards it. And in ETH, that is a more likely concept than it is in RTH. In RTH, they tend to play more games, or slightly different, nastier games than they do in ETH. And nastier is a subjective term, so take that with a pinch of salt, but the games are different. And in ETH, the resting liquidity in the book may have more weight in terms of the probability of transactions occurring at or near where that liquidity is. And the word near is very important in that sentence. Very often, the advertising of liquidity at a very, very high level. Say, for example, if they'd advertise here at 4410 NES, they may not actually want to transact at 4410. Provided they had got enough business done before they got there, they might then flip the market and push it downwards. So it's just an indication of the areas in which they're likely to transact. Okay. Right, I will just quickly flip to the slideshow because I just wanted to kick off an idea for people to go and investigate on their own. So if I turn that one off and we go back to the slideshow and we move on to a couple of slides which are a little bit later in this deck. Okay, it's these two slides here. Right, this is from yesterday's ETH session. It's the ES, and the previous slide is the NQ. I've chosen an arbitrary time frame here of 30 seconds. That's every bar is 30 seconds on both these charts. And this is just to give an idea of why I'm talking about liquidity in this webinar. So if I go back to the ES chart, okay, and again, I say 30 seconds is arbitrary. The question is, what is on this chart and why am I showing it to you in the context of the subject of liquidity? Okay, this, again, let me stress again, the time frame is arbitrary. Choose whatever you want. I've chosen a short time frame for what I'm trying to demonstrate. Up above, you've got the same as our normal trading view chart. You've got price bars or candles, whatever you want to call them, and you've got the VWAP bands with VWAP with the black line there. That's kind of irrelevant for this purpose. Below it, in this sub panel here, you've got a liquidity calculation. This is just something I did in Sierra. It's just you can do this in any charting platform which has level 2 data, and I better stop and explain what I mean by level 2 data in case there is anybody who is watching this webinar who uses Bookmap and does not use level 2 data. So level 2 data is the data on the resting orders beyond the nearest price level. So if the price was currently at 4407.75 and well, this is now historical because it's just changed, and there were bids at 4408 and 4407.75 and an ask at 4408. Only level 1 would only show you the amount of orders at those two levels, whereas level 2 will show you basically as much as your data provider is willing to give you for the price that you paid them. So, for example, on the Rhythmic one, if we switch back to that for a second and then come back to this chart, the Rhythmic one here, you've got the full book level 2 depth. So you've got orders in the book that go probably about 800 orders or so, probably maybe even more if you scrolled that far. That's the same in Sierra. They've got their own feed, and it's essentially the same data, but in a different data feed. So if we go back to that slide, oh, love the way that this moves slides when you don't want it to. Okay, let's get back to make sure we stop there. Press pause so that it does not move off this slide. So I've done an arbitrary calculation in the subpanel, which is basically adding up the orders, or I think it's actually adding up the average orders in the 10 closest levels to price. Again, 10 is completely arbitrary. It's not meant to lead you down any path of using it. It is just a demonstration of how important liquidity can be, or potentially can be, and how price can follow it. So you can often see that as price moves in a direction, liquidity increases, and basically as it reaches a peak liquidity, if here in this example up at 4411, you need to add a 4,000 on. I've just only got the last 3 digits of price just to make my price column a little bit narrower. Liquidity increases. In Bookmap terms, and if we flip across to Bookmap, that would be represented by price going up to an area of high liquidity on an up move. Okay, so if I go back to that slide again, and yes, it's done it again. We have to keep moving back to the slide to see it again. Okay, all right, and maybe we can see it a little bit better in the Nasdaq one. That quite often price will stall at low liquidity and move continuously with high liquidity as liquidity is increasing. Again, this is just a starting point for people to research the concept of liquidity. Okay, there are lots and lots of different ways of looking at liquidity. In these webinars, we are focusing on what we can see in Bookmap. And I'd also like to stress that I am the Sierra instance, the chart that I just showed you, which was just for the purposes of this webinar, is not something I use in my intraday trading, but it's one of the many things I do as part of my research process. A lot of this trading is about working on your game, working on yourself, and it's not about actually trading. So I do an awful lot of research. I do a lot of programming, which includes lots of ideas to go off and test on things. And this is just an idea of how to demonstrate how price and liquidity, I won't say the word correlated, but are related to each other. Okay, right, let's go back to our main screen. Let's get off that one. All right, and back to our little agenda. Okay. Right. So the rationale, or the theorem I've espoused as to whether it has validity or not is up to you to determine for yourself, is that with supply and demand and with auction theory, price does pay attention to liquidity in order to transact, and that is part of the self-fulfilling process of how auction theory and supply and demand work. So to put it in a much shorter sentence, liquidity is important if you are, or liquidity can be important, in my opinion, if you are a supply and demand or volume profile auction theory type of trader. Okay, right. Now we're going to move it to, we'll just go back to that webinar for a second. Okay, yep. With the ways to see it, I just want to quickly talk about technical analysis and how this relates to it. and why you might want to use Bookmap instead. This is not an advert for Bookmap. This is just me talking about how to see liquidity. Okay, so let me get my pen out because I haven't got it out yet today. All right. Okay, let's get the pen. See if the pen works today. It does work. Okay, trend line. So the first thing is something you may hear about, and this is a trend line. I'm going to try and draw one just here, there, and it's the same trend line in NQ just there. Trend lines are often seen, or trend lines used by people that do also look at liquidity. Trend lines are seen as a proxy for liquidity. In other words, price moves along that direction, shown approximately by the trend line because liquidity is there. So every time it falls back there is liquidity for transactions, i.e. buyers in this instance, to keep buying and pushing it up and sticking to that trend line or the trend line encapsulating or bounding price. Okay, so one of the technical analysis proxies for seeing liquidity is a trend line. Okay, that's just one theory. That's one approach. And again, all these ideas on this particular bullet point, other than that chart that I drew up of the liquidity calculation, are other people's that are just generally in the public domain. And I do encourage people to go off and research it. So one proxy is a trend line. Another, which you will not see on my charts, is a short-term moving average. I think I've heard of 8 MA, 9 MA, 11 MA, again being a proxy for liquidity because price will tend to not break those MAs and continue in the trend when a trend is in place. So those are known technical analysis kind of proxies for liquidity. I personally do use trend lines on my high level charts. You've seen them drawn on my daily and also on my very, very short time frame charts. So I do hold that validity that trend lines are interesting to me from that liquidity perspective. And I'm also very interested as to when they're broken. As you can see here, if I switch colors, when the trend line is broken there and there, that interests me. We can talk about that in relation to supply and demand at some other time. But yeah, so I just want to say that I do use them, and they are a proxy for liquidity, but I don't use them in the sense that they are of them being a proxy. Instead, I do use Bookmap, but that's just something that I thought people might be interested in. Okay, let me get rid of all of that. Okay, and let's get back to Bookmap. Okay, so we're now back in Bookmap and we're talking about how we see liquidity. So I want to talk again about some of the things that I have in my Bookmap because I strongly believe in liquidity and I strongly believe in being able to see liquidity in as objective a fashion as you can. Before I get into this and we start talking about individual bits of Bookmap or parts of the Bookmap screens that I've got and how they relate directly to liquidity, in case people aren't aware of them. Just checking to see if there are any questions. No, we've got about 18 people watching in YouTube, and we have a few. We've got a few in Discord as well. Okay, all right. Okay, the liquidity, you've got the essential part of Bookmap being the heat map, which shows you liquidity. And if we turned off everything else inside Bookmap and we just had the heat map, so we had none of the stops and icebergs and none of the other stuff, the absorption, which I'll get into a little bit later, and none of these liquidity markers, that would be a very, very good representation of liquidity. So it's just basically the heat map on its own is a map of liquidity, and the current order book is just a numerical representation of that. I always have the order book numbers there so that I am not, or I take the colors that I see in an objective fashion. In other words, I try and not let myself get hoodwinked just because a price zone is red. For example, we can always change all these colors up. So, we could go back to the gray one. Just because it was gray there that that is one piece of the puzzle to me, but I'm always going to look over here and see what that value actually is, and I'm going to um, assess it in context with the other liquidity that is around at this very moment. In other words, living in the present tense, the here and now, and also in relation to what I have observed at this time of the day in this type of session over the course of many trading sessions. So that's how I use the general bookmap, heat map, and the order book column. Okay. In terms of seeing how that changes, one of the columns that I am not showing, so if I wanted to, one of the things that the Bookmap, when it first got released, quite interesting going down there, nice little breakdown again towards that 02 level we were talking about earlier, is the quotes delta. So you see the changes in the order book flashing up when they're pulling and stacking. I don't use that because I don't find the numbers in themselves, the way they're represented, to provide additional information to me beyond the shading in the heat map. In other words, if I actually turned the heat map all the way up, and I don't do this very often, and I watch the shading change in the heat map, that is more useful to me than the quotes delta or the pulling and stacking a column. So I personally do not choose to have that there, and nor do I choose to have the heat map in that sense. I'm actually more interested in larger changes to the liquidity position or liquidity positioning, and I'm interested in in seeing more clearly where the resting liquidity is, and I can see that more clearly by fading out that heat map as I just showed with the slider on the screen. So again, I just wanted to explain how that relates, and then we go into the nitty-gritty of some of the other little add-ons that we've got here to help us. And again, they are to illustrate or to clearly illustrate to the best that they can the liquidity to picture to us as it is and as it has changed and is changing. All right, so the one of the next things that I look at, and this would have been really quite useful at the European Open today, so we may have a look at that as well. If you look at the European Open here, and I just drag back ES and NQ, so you can see that again we had one of those bullish opens where we drove up through the London Open. I'm just talking about in a high level sense, and we went up and up and up here in NQ to 15080, and in ES we went up and up to 4425. Okay.
NQ by 55 stop.
And if I go back to the London Open, I just want to explain one of the components on my heat map. So again, people will understand why it's there and why it relates to the question of what is liquidity and where is liquidity. So if we go back, it's always fun zooming this one backwards to get what we want to see. Okay, what we want to see is this picture here. This is an add-on called Outside Liquidity. When it was developed, I did not use it because I did not look at the settings and I did not see how I could use it for how I view liquidity. It's only after I noticed other people using it that I actually got into the nitty-gritty of what those settings were and to see whether it would have some relevance to what I do. Okay, so if I actually look at the settings that we've got in the outside liquidity here, and I'll show you what I've got. So it's showing the bid and ask liquidity. It's showing only the 30 levels closest to price. It's including all the visible levels in case I've zoomed in or zoomed out. So it's basically just the 30 levels above and 30 levels below the price, and it includes the liquidity on the price now. So that's the same example that we were talking about before. If price was at 440775/4408, it would include those two price levels. Okay, I'm not using any of this half-life distance stuff. So what essentially is it showing me when I've customized it or configured it like this? And I have two numbers. I have a number above and a number below. So this 2000 at this time, which was coming up to, let me just go, you're just seeing the numbers change as I drag it. Um, Okay, as we approach liquidity, maybe we should drag it back before it gets too close to that liquidity. So it's close enough, but not that close. What it's showing me is, are there many, many more orders above, i.e. liquidity above, than liquidity below? So we noticed here that it's 1 to 1, 1.9 thousand to 1.9 thousand. Uh, and that actually changed at this point here where we had a 1.8 to 2.8. So it was 1 to 1.5 or 2 to 3, depending on that ratio. What I am trying to see is there a significant difference in the ratio? Have we moved a long way from 1 to 1, whether it's in favor of liquidity being above or in favor of liquidity being below? So I'm just looking for a clue as to, is it clear that liquidity is above? And I'm limiting it in this instance to 30 levels because there's only so many levels you can look at in the present swing. Let me put it that way rather than the next few hours. So I'm confining it. Again, there's no definitive level that you'd use, whether it's 30, 40, 50, 20, 10. Choose your own. But it's just a mechanism for seeing the ratio of liquidity above to liquidity below. And it's just a snapshot so that you can see quickly, because you've got these two levels which are here and here and here and here. You can see within this picture that this has changed dramatically as they approach liquidity above. So this went from 1.8 to 2.8, whereas that stayed the same. Just so that you can see the price is transacting towards liquidity in this instance, and that's the purpose of that one. Okay, and then we'll talk about the other key add-on that I have, which relates directly to liquidity. It's not the stops and iceberg, it's this one here, the plus 122, the minus 100. Let's have a look at it. Okay, so this is the liquidity marker. Again, I pretty much haven't played with the settings on this one, so they're very close to the default settings. I won't reset it to default because I haven't saved what my settings are if I did that. But again, this is just to show liquidity changes. So I've got it on liquidity changes rather than max liquidity levels. I don't need it on max liquidity levels because I can see visually bright colors showing me what the max liquidity level is or zones are in the price range that I'm currently zoomed in and out of. And the other reason I don't need to use that setting is because you'll often see me zooming in, out, both on the horizontal axis and on the vertical price axis. So to me, it's liquidity changes that are more significant in the way that I use my Bookmap. Okay, um, so one thing we will talk about time and time again when we talk about resting liquidity in NQ is, this is something I've spoken about at length, so quite a few times in the webinars, is there is resting liquidity that's been here for X hours or Y hours. And what this particular add-on does will show me at a glance what they've done to that resting liquidity, either i.e. to start that resting liquidity or any change to it. So here, for example, at the time of 8:02, they added 43 in Nasdaq at 15,000. So they added to a resting liquidity, but again, we tend to disregard that because it's a round number. If I can zoom back out in Nasdaq, and Nasdaq, I find this particular in fact, because it's such a thin market, I find both the outside liquidity marker and the liquidity changes marker more useful in ETH than I do for ES. I think it's a different scenario and a different story entirely for in RTH, but it's taking forever to zoom, so we'll just try and get back. I'm just trying to get back to the London Open again, so you can see the difference in the liquidity marker for NQ. So we really want to get it into this session here, 2:30 to 3 o'clock. So I mean, at that time there, which is about 145 or the beginning of the pre-open in the German futures, you can already see 154 to 216. If you think of that on a ratio basis, um, there's much higher ratio of liquidity above than below. And as we went through the session, although obviously you have ebbs and flows, the liquidity was clearly above and the ratio was significantly higher. But if you have access to that add-on, I would recommend it for research for the ETH session and seeing how they change the liquidity picture. I think it's very useful in the sense that you can see how they manipulate or change that liquidity at significant swing points or turn points in the ETH session. Again, it's something that each individual should research, in my opinion, should research so you can get a better understanding and also more strength of conviction in how you personally would use it with your setups in your trading. But again, it's just something that I just wanted to point out because we are talking about liquidity, liquidity, and liquidity in this particular webinar, and that's why I have them there. Okay. Let me go back. Let's go and do a couple of minutes of live analysis while we are here. Okay. So we had a thick band of liquidity up at 4409, 4410. They came and tagged it or didn't actually interact with it, and then they went down to the liquidity below. So again, it's one of those ETH liquidity discussions. I also did another change. Again, my bookmap here, even though this is exactly how I am using Bookmap at the moment in my own trading, I also try and make it as clear as possible for the purposes of learning or demonstrating during these webinars. So one other change I have made for this purpose is I have removed all price lines and all bid and ask lines from my heat maps. So if you go back to the last webinar, you'll have seen like a little gray line connecting all the price changes as price moved down and up and down on this section of ES. Okay, in my personal trading, I don't have that. It was just you often see that most people do. They'll either have the bid ask lines or the price line. I don't. If you see a colleague and friend of mine, Yuri, his name in the futures Discord channel is DOV or DOV. You'll see that he has the same approach to me on the heat map dots, although I think he uses delta dots, not volume dots, and he does not have those price lines. I think the map speaks for itself, and the purpose of the map for me is liquidity. I mean, if I want to look at price bars, I'll go to TradingView or I'll go to Sierra, and again, I use Sierra because I program there and because I execute my trades in there, and I have done for quite some time. So that's why I use it, and it goes with my little business and my business plan. So that's why I don't currently execute in Bookmap. I do have the ability to execute in Bookmap, but I choose to do it in Sierra. And a lot of that is because some of my entries are semi-discretionary. In other words, they are executed partly by an algo using my discretionary rules. Okay, right, so we've come down, tagged the liquidity at 4402, gone down further, gone to our round number, and we've reversed back towards the liquidity at 4410. Okay, the other thing I've done since our last webinar is I have put on the absorption indicator, and if I flick across to NQ, maybe a better, oh no, actually ES is fine. One of the reasons I've done it, and again it's partly for this webinar's purpose, is so that we can see the large trades. So if you look at the settings of the absorption indicator, and I can talk about this more on Friday. I think I pretty much left this again at default. Within 0.01 seconds, there'll be a marking if there is a volume of 100 or greater on the chart. In other words, the only reason it's there is to mark or annotate automatically large trades. And one thing that I keep stressing as something that I believe is worth checking out and for your own trading is the propensity or the probability for large trades to be retested. And one way of seeing a large trade, and this NQ one's a perfect example, is with this absorption indicator. So you can see here you've got a volume of 230, you've actually got an absorption marker of 117. I think it says 117, maybe it says 217. It's hard to tell because it overlaps with another indicator. So I can see, regardless of what the actual number says, that there was a large volume there. I can always drag my cursor over here and see the exact volume, 230. And I then take it into the context of whatever is in the chart actions, where the liquidity picture is, and I just know that there's a decent probability that that will get retested. On this occasion it was, before we moved it down. In fact, let's have a look what happened afterwards. Yep, it was there. In fact, we had a little up thrust. So if we actually zoom in, so you have this probability theory that we're going to get a retest. Actually, it has a false breakout just above, and that is the start of the drive down. In fact, no, it's not the start of the drive down. We actually go and try and touch the liquidity there, and then we drive down. Sorry, I'm not really trading at the moment. I'm just having a quick look in the light of liquidity and in light of that absorption indicator. I might just stop right now because it's 41 minutes and just see if there are any questions at all on the concept of liquidity or anything that I have said. Yep, again, I've got no questions. Again, it's a little bit like Friday. Okay. Right, I did promise that we were going to do some live order book, live bookmap analysis, and this is in light of there being no economic news. There's actually a couple of other things. There's one thing I mentioned about one of the slides that I said it had a dual purpose, and I didn't go through the dual purpose. So if I just switch over to the slides again, just get rid of that. There was something else in the slides. It was in the TPO chart. Okay. Yeah. This is an example of how I use the two trading platforms together. So I've shown you how I zoom in and out of the Bookmap heat map to look at liquidity in ES and NQ, especially resting liquidity. What I've got in Sierra on the right hand side is the order book as well. So these are just bars which are just orders resting in the book. So this is, in other words, this is another representation of the COP column in Bookmap. So I have that, so I can put the liquidity that I'm seeing in Bookmap into context. So at that time, this was coming into 3 a.m. Eastern, or just coming into the London Open when I took this picture here, or this screenshot. You've got this liquidity, the largest liquidity on this book here was up at the 425, 4426 level, which we now know in hindsight, and hindsight's one of those dreadful words again, that is where it got to and turned around. So that is how you can use one example of how you can use the same data on liquidity in two platforms together, so that they work together and they don't contradict or get in the way of each other. Okay, and I think I had the same slide on NQ, so since we talk about both together, let us just move to the next slide. So again, it's the same right-hand column, these little dashes here showing where liquidity was. So you have this band of liquidity there and some decent liquidity just above coming into the London Open. Anyway, we'll get back off that. There is a question. Oh yes, sure. You want to know the statistics today. Okay, right, let's have a quick look. So the ETH, the average, I'm just responding to Bellion, who's just asked a question in the Discord channel. Oh, and there are some questions. Hold on, sorry, in YouTube, so I'll get to. They've gone down my screen, so I apologise for that one. I will get to the YouTube questions in a second. I'm just going to answer Balian first. Balian's asking about the statistics. So in ETH, the average over the last 10 days for ES is 32, and we're at 26 so far today. NQ is 151, and we're at 126. That is within the ballpark. With statistics, you get some people going on about statistics being magical, etc. They're not. They're statistics. They're numbers calculated as an average using some form of mathematical average over some form of data set, or in this case, some period of days. In my case, it's 10 trading days. A statistic is just a statistic. It is just one number. So it's something that's useful. But when I say it's in the ballpark, it means that if we'd got to a range of 26 in ETH for ES, that's pretty good. You know, that's close enough to the average to have been relatively fulfilled. So yeah, that's what I mean. If I extend those statistics, Asia had 16 in the ES against an average of 15, and in Europe so far it's 26 as against 29, and in NQ Asia 77 against 70, so a good range in Asia, and in the Europe 126 against 133. So you can see that is very close to the average. Right, let's go off to YouTube and let's have a look. Okay, how am I utilizing liquidity and order flow to initiate trades? I'm looking at Kubamoto's question on YouTube. Okay, what I'm talking about when we talk about setups, and we did look at that for a whole webinar on Friday, and we're going to do it again this Friday. Last Friday we looked at NQ, and this Friday we're going to look at ES. What I am talking about is supply and demand, and I'm looking at three setups. And if you go back to that webinar, you'll see what those are. So from a high level sentence description, I'm talking about a test of a supply demand zone. The second one's very close to a double top, double bottom, and the third one is a breakout failure, which in Wyckoff terms is either called a spring or an upthrust. Again, you can Google both those words, spring and upthrust, and you'll get pretty pictures and detailed descriptions. So I'm using those in relation to them. I'm using the liquidity with the setups. So I have in my process for how I execute those three setups, and those are the ones I'm focusing on for these webinars, certainly for the time being, how we use liquidity and how we use Bookmap on that. And order flow, again, we defined that in a webinar, was it last week or the week before? Order flow is just the orders in that, i.e. the liquidity in the on the map or on that column as it currently is or as it currently changes, and the flow of trades or volume into that map. That is order flow. I think I think when we zoom in to Bookmap and we go down to the millisecond range, let me check that I am actually displaying. Yes, I am displaying. So if we zoomed right into this down to the millisecond level and keep that on the screen, that is order flow. So it's every single one of those trades, and remember these are not deltas, these are volume dots. So every one of these is some form of trade or trades plural. Those trades there, those dots combined with the liquidity map and the order book column and the changes there, whether it's at the current price or anywhere else on above or below, that is my definition of what order flow actually is. You will see a lot of stuff written about this on the internet, great tools about capturing order flow. Yeah, and the answer before you ask it is I probably use nearly every single one of them. I've got so much stuff written on footprints, it's not funny, for example. So yeah, I know about all those tools, but I'm just using it in its most granular form for this discussion. So I will look at that order flow, which is the changes to the map and the orders that come in, particularly the larger orders that come in as they relate to where that resting liquidity is. Okay. Or large trades as they are, and also we'll talk about icebergs and stops in due course as well in future webinars. So I hope Kubamoto I've answered one of your questions. Hello Alois, good morning. Sean, first time tuning into your stream. All right, thank you. Thanks for the nice one. Okay, I think I've just about covered that. We're at 20:49, in other words, 11 minutes or 10 minutes to go in the session. So um, just let's grab a live version of this. So yeah, and we'll just show all the ETH sessions as well, so we can see what. Again, the grey shaded sessions are the ETH sessions, so it's just so that you get an idea that you can in ETH you can have small sessions like that in ES, and you can have much larger ones as well. Like this one was probably nearly twice as big as that one. Um, this one is nice as a setup to the RTH because you have these fat or poor lows and that gets taken out. Anyway, I was just having a quick look as to where we are in relation to yesterday's range, yesterday's ETH, and where the liquidity is. So when I said I have these bars on the right hand side, which is another representation of the order book that we show in Bookmap, that is exactly what that is. In other words, the data in these bars and the relative sizes are identical to the same data that's represented in its Bookmap fashion. Um, so basically, we're within range. We've got nothing new going into the RTH session. So you've got no great information that's come from this ETH session suggesting to you, for example, this may definitely be a trend up day or a trend down day. There is none of that information. It's basically been a bunch of day traders or algos or large banks playing with the market during the ETH session, probably getting their money's worth and just trading from here to there and back again. Okay, let's go back to Bookmap. Let's go across to, there was a couple of questions on the price change algo. Oh, maybe we should turn this on as well. This is the sound for the volume pressure. So this is just buys and sells. That's always quite interesting having that on. That's something that I do turn on in a volatile trading session. By volatile, I'm talking about at the London Open for that hour or in the RTH morning. This makes quite a racket, i.e. quite a large noise when it gets going, but it's also a good indication of increased activity and therefore likely increased volatility. Right, we've had some questions about about the price change algo. Again, I've got basically the default settings. I can show those in case people want to see them again. So if we go to the market pulse price change algo, we look at the ES one. The threshold 70, and that is bog standard default. I've got nothing changed. Effectively, what this is, and I've created an almost identical one for a set time frame in Sierra, is this just looks at the price change objectively in relation to the last X period, whether it's minutes, seconds, or whatever, and gives you an objective percentage change over that period. So when it goes green, in other words, when it's above 70%, that means that is a large change upwards. And because the theory is, one of the theories that we believe in auction theory is that price can often not go in a straight line. I'm trying to make sure I don't say anything which can get misconstrued completely. Because price does not usually go in a straight line, there will normally be a reversal or at least a pause once it gets to above that 70% or minus 70% level. And that's the theory of the market pulse. Okay. The API, I believe, for the market pulse, which is a way to interact with all the trades that are occurring inside Bookmap. I believe that the API will be out there and released in the near future, and I certainly hope that that the language, whether it's Java or Python that we code in, will be accessible. I'm not a great Java programmer, but I can program in Python. But I've got various ideas of the variations of this algo. But for what it is, I think the price change algo is very good, and I think it is good. So otherwise, I'd never have tried to replicate it for a time period in Sierra. Okay, I hope, and in terms of could we have used it in this choppy session, you can have a look for yourself on this ES of where the greens and the reds came in and whether you could have got something out of this in terms of your setups. As I mentioned previously, I like supply and demand, and one of the trades. I mean, this is kind of a heads and shoulders in that sense. It's also a test of this supply zone here. So you could have said your market pulse green zone here was potentially part of your trigger to get short towards the 4400 level. So that's one way you might have wanted to use that market pulse indicator in conjunction with the supply and demand setups that we talk about here. Okay, right now we have quite a large, okay, chance to talk about a live iceberg, which we don't often get a chance to talk about. Okay, one of the reasons why I zoom in, that iceberg has just been broken. So there was a sell ice of about 479. You can see the final number just shown there if I get out of the way, 479 and 83 MBO stops at the same level. I don't trust these icebergs unless they're huge to actually, in other words, I don't trust them in the sense that I'm not going to lean on them to go short at that level. They'll often get taken out and then they may well go in the direction that we thought they would, you know, a sell iceberg go down, but they don't normally play out in such a clean fashion. So here, the fact that it got taken out, they took some people piling on, they took their stops, 83 stops, then they went down. That is often what they do, and anybody using the icebergs indicator will probably see that and will have worked that out for themselves. That's just something I wanted to point out. Sometimes you get a huge number, so instead of a stop of 479, you might have a stop of 5,000, in which case it's acting as the Great Wall of China, and you cannot break it, and then it is possible to lean on it, provided you are happy with the risk that you're taking. So in that circumstance, you might take a very, very tight risk behind that iceberg, you stop just behind it, and accept the fact that if it got breached, then it takes you out. In this circumstance, if you had taken that, you would have been stopped out. Right, let's have a look at NQ and how it's tracking as well. So we'll just zoom out just to see this liquidity. So we had a bank of liquidity. So you had a bank of liquidity where you had three separate banks. So I'm talking about a zone. So if I zoom up, you can see it's a zone of liquidity there. And I drag that down. There's a zone of liquidity there. And there's an individual price level of liquidity there. Because NQ is so thin, I tend to zoom out on that price axis so that I can see what would I call a band that may act as resistance. So if we were looking, it's not looking very thick though. Again, one of the things that I do look at is in NQ at this time of the day is a resting liquidity of at least 30 to take any notice of. And even though if I combine those levels and I zoom them in, it was nowhere near 30, it was 17. And as it turns out, they've just taken it away. So there's no real liquidity that you could actually lean on here, either as a target or as a defense mechanism for a stop. But it is interesting just watching it and also being aware of what is and is not a decent amount of liquidity in NQ at this time of the day. So again, I personally don't look at anything less than 30, and again, that is the reason why I've got this column here, the COB column, rather than just looking at the colors on a heat map. So you know, you've got a level there, supposedly 40, but it's only been there for a few seconds because we are really zoomed in on the time axis. But a level of 40 that had been there for hours and hours would garner my attention. All right, okay, so yeah, we're just chopping around effectively, and I'm guessing that's what ES is now doing. Yeah, we're just chopping around, and we are still inside yesterday's range on NQ and inside ES yesterday's range. Okay, hopefully that webinar was of value to people. I think I'll call it a day now. So thank you very much for coming.